Cattle prices were mixed on Monday. Ag Day's Michelle Rook joins us once again with more on the latest trends in that market.
Brad Coyme is joining us with today's market analysis. Brad, let's talk about the cattle market because we've had kind of a disconnect with this strong cash versus futures going the opposite direction. So talk a little bit about why that's happening.
Yeah, well, we certainly have had a big disconnect. And some of it's, I think, because of where we're at, what we perceive to be supply side wise, what's coming. In other words, we think there's more cattle coming. And there probably is, right? That's normal. Seasonally, there's more calves, the northern feeding cycle, right? So you've got a discount structure a little bit, but this one is crazy. You know, I mean, where last week I get 145 for cash cattle and June's are at 132, a $13 basis is crazy. Some of the problem is an inherent problem that's starting to develop with our futures market, and that is that we just seem to can't attract a long speculator.
So the funds are scared. They don't want to be in there because of the economy or what?
I think that the funds don't, yes, I think that that's a big part of it. The cattle market, you know, if you're at SeaWorld and you want to sit in the front row in the splash zone, put the cattle market right there. Anything that seems to be unnerving or scary or uncertainty is always bearish the cattle, because it seems like you've got a fund community that says, you know what, if we go into recession or if we have a deal where people have a question with what they're going to do with their what's the right word I want to use here, their optional spending. I'm not saying this right, but
discretionary.
You know, thank you. Discretionary spending. You know, are they going to spend it on a perceived to be a high-priced beef product? They also, I think, are afraid that when you have uncertainty about the economy, general recession worries, and all that other stuff, you know, that moves that fund manager to another commodity. Also, these funds have been distracted by this super sensitive inflation commodities like corn, like crude oil, like some of those, you know, so they've focused on those markets at the expense of not really doing anything with the cattle. And you can see the last little while it's just been fund liquidation like crazy. Our open interest is down around 300,000, which is a joke compared to the old days. The funds just don't seem to like our market right now.
All right, well, we thank you for that analysis today. Brad Coyme joining us, and more Ag Day in a moment.